My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'm Bill, make friends. I'm just trying to make you a little money. My job is not just to entertain, but to put it all in context. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Maybe there's nothing can be done. Maybe it's a hopeless situation. Or it's a situation where someone can figure things out, fix them. But they have to come out of retirement or have experience that they don't need to be taught. They just happen to have another job elsewhere. Sure, the average had a good run today. Dow gaining 243 points, S&P advancing 0.38%, NASDAQ up just 0.03%. But so many big-name companies are struggling here, and I found myself wondering which ones can be saved and have their stocks go higher, and which ones can't. Look at what happened with Starbucks. Really is. This is an amazing business story. I've got to tell you. Here's a stock that had been in free fall, but all it took was bring in one person, a talented food executive, a CEO, and then it soars. The new guy, Brian Niccol, is a genius at what he does. He turned around Chipotle, which it's hard to believe it was ever struggling now. But it's not like his predecessor, Laxman Narasimhan, was a knucklehead. Laxman was beloved at McKinsey, beloved at PepsiCo, and beloved at Reckitt Benckiser, where he was the CEO. When he took over Starbucks, all I heard was he'd worked in snacks and beverages and packaged goods, and he really understood the process. He was supposed to be the logical, considered choice. Now, I don't know what the heck happened between then and now, but ultimately it became clear that Starbucks was a great company with loyal customers and not so hot management. Niccol, the new CEO, might have to take a page from Ron Shaich, the former CEO of Panera Bread, who had to develop a whole new model for stores because the old locations were slow, unappealing, expensive, couldn't handle mobile ordering. Hey, you know what? That's the exact problems that Starbucks is dealing with. It worked for Shaich with Panera 2.0. Maybe it can work for Starbucks with the novel 2.0 tested and ready to roll. Maybe we got to roll it out in another city. I don't know, but it can happen. But of course, the old CEO, Laxman, he didn't want to do that. He thought he had all the answers. Behind the scenes now, many are blaming founder and former CEO Howard Schultz for lording over his successor. I think Howard was more appalled by the lack of contrition than he was by the horrendous execution, which he did not like. But if you're blaming Schultz for firing Laxman, maybe you should thank him, because he just created $20 billion in value when we learned that they poached a brilliant CEO from Chipotle. $20 billion of wealth creation in one day? Hey, I'd like to take credit for that. We all take credit for it. If we're looking for what can be saved, you need a big change at the top. Starbucks is going to become the model. So now let's talk about Love. No, not Love. Love, L-U-V, Southwest Airlines. Today we saw the slate of 10 potential directors from the activist investor Elliott Management. They want to bring in these 10 to replace 10 on the board. Well, of course, everything would change if they did that. Every one of Elliott's nominees excels in the fields that Southwest needs: technology, revenue management, safety, government. On the other hand, if left to its own devices, I bet Southwest would keep going lower. There's still time for the board to accept their lack of diligence and move on with their heads high. But I'm definitely betting on Elliott here because his people are better and they will get a better CEO. Starbucks. Let me give you another one. Disney. Now, this one's salvageable. We know Nelson Peltz, another famous activist and shareholder, wanted to join the board. Management spent a fortune keeping him off because apparently they couldn't stand the guy. Disney stock went from the 80s to 123 on Peltz's involvement, but ever since he lost, I mean, what do I need to tell you? Fell back to 86. What does that say? Yet this is a company that dozens of brilliant execs would like to have a shot at running. To me, Disney's worth holding because it's simply got so much valuable franchises like Starbucks. It's hard to destroy no matter how hard management tries. You just need the right team, and it's a winner. You need a change agent as CEO, not just as a director. And in the case of Southwest, maybe you do need to change up the whole darn board. Now, let's take a look at another while we're going over these things. Let's talk about Nike. I think it's time we have to come to terms with the idea that something may be very wrong with Nike. Otherwise, how do you explain the stock's plunge from 122 to 78? Now, we've seen a resurgence in New Balance, an uptick in Hoka, some startling positive numbers from On Holdings. Adidas has made a real comeback. Nike, not so much. And I'm being very polite. Maybe there's nothing that can be done. But CEO John Jono, consultant background, by the way, just like Laxman Narasimhan, who got booted from Starbucks. Then he went to work at PayPal and run ServiceNow before going to Nike. I mean, these two management consultants have something else in common. They always have said and agreed that they're doing a great job, even when the stocks say the opposite. Look, if you've read Shoe Dog by Nike founder Phil Knight, which is fantastic, I can tell you that Donner is no shoe dog. The stock stood at 101 when he started as CEO in January 2020. It's now at 78. That does not seem like value creation to me. People would take their Nikes off and walk on hot coals to get that CEO job. Maybe there is someone who can do something better. A Brian Nickel of shoes? Don't you think there has to be one? Now, after the close, we learned that Bill Ackman's Pershing Square took a stake in Nike, according to the 13F. We have no idea of his intentions. Maybe just recognized a salvageable situation and wants to make money. Maybe he has already sold it. Who knows? But we do know that Ackman has been an activist, and this stock sorely needs one. Someone has to say the truth. All right, how about a former Dow stock, Walgreens? This is a totally different story. Right now, it's being run by Tim Wentworth, and it's being run into the ground. But you know what? I can't blame him. Walgreens has been a slow-motion train wreck for ages. I thought this chain was doomed from the day Amazon put same-day delivery into motion for thousands of things you used to get at the drugstore. But unlike Nike or even Southwest, the damage at Walgreens may be so great that a turnaround is impossible. I do believe in Tim Wentworth. If there is a possibility of a turnaround, he will do it. I just don't know. How about Intel? Picking all these big stocks. The chip maker is overextended and losing share in its major product lines. It just sold one of its best assets, which happened to be 1.18 million shares of ARM Holdings. Yeah, really, that's what it comes down to. Intel's building plants all over the place, and its CEO, Pat Gelsinger, seems to believe that he, too, like John Donahoe, like Luxman Narasimhan, is doing a great job. Yeah, it is reminiscent of the CEOs of Starbucks and Nike. Intel did do something shrewd, though. It brought in two savvy firms, Brookfield and Apollo, as construction partners. My advice, the people who run Brookfield and Apollo, you people should take a crash course in how to actually make and sell semiconductors, because looking at Intel's current trajectory, you're going to be doing a lot of that. Finally, can Boeing be saved? If there were 5 aircraft makers in this world, then I would think Boeing would have been done for and out. But there are only two companies that make large commercial aircraft, which means these guys can afford to make endless mistakes, and they've taken advantage of that. I think Boeing's like the old GE right now, a company that can make it, but it'll take a lot of really good work and great execution. From what I can tell, this new CEO, Kelly Ortberg, may actually be up to the task. I was going to suggest that he move the headquarters to Washington where he make the planes. The fact that the previous CEO hadn't done it was a sin. But, of course, he's already done this. It's going to take a lot of time to turn around Boeing. I think it's probably too soon to buy the stock, given the balance sheet so hideous. But Ortberg has horse sense. He was considered an excellent exec at Rockwell Collins, a maker of aerospace components. Given this is a duopoly where America needs Boeing to do well, I bet he does pull it off. It's just not the time to buy it. Look, we can bemoan companies that can't shoot straight. Or we can look at what Larry Culp did when he came in and saved GE from collapse. We can see the immediate faith of marketplaces and Brian Nickel to turn around Starbucks. This can be done. The companies have to stop fighting it, though. Here's the bottom line. Right now, it looks like, other than Boeing, the board seem pretty happy with how things are going at these companies. Maybe a staffer put the stock chart page upside down in the board pack, and the directors are pleasantly surprised. Or maybe the CEOs and many board members simply don't own much stock and they just don't feel the pain. Otherwise, I can't imagine how they can just sit there and accept the status quo, because, frankly, in each case, you and I both know it is simply unacceptable. Let's go to Jason in Connecticut. Jason.
Mr. Cramer, big booyah from Jason in Connecticut. How are you, sir?
Good to hear from you, Jason in Connecticut. What's happening?
Hey, I'm a longtime follower and club member here. Thanks for all you do for the investing community, Jim.
I hope you like the call today. You know, I graded some of those guys pretty hard. You know that. Graded some hard.
Yeah. We appreciate all you do. Hey, Jim, my question is on Chevron. I'm a longtime shareholder. The stock's been good to me, and it pays an excellent dividend. Should I pick up some more shares at this level? Thanks, Jim.
I think that Chevron is a buy. I think they do a great job. I think that Mike Wirth is terrific, and I think that you should pick some up. This is a nice level with a 4.5% yield and buying back a lot of stock. I think it's terrific. Let's go to Alfred in Virginia, please. Alfred.
Hi, Jim. Thanks for taking my call. I'm down 30% on my position on Etsy. Should I buy more, sell, or hold? Thanks again.
Oh, my. Okay, this is such a hard one because I think Etsy is such a great. I mean, it's one of those companies where I buy so much stuff from them. Many other people do, but that doesn't cut it. I think you're going to have to understand that if you're willing to buy time for a while, that's what you're going to have to do with Etsy, because it's not going to go right back up. It's just not. Let's go to Peter in Maryland. Peter.
Jim, yeah, Peter calling from Baltimore. Yeah, I got my mom all over me on this Occidental Petroleum stock. She should let up. Me, the Oracle of Omaha is all in on it also, so would love to get your 2 cents.
Well, it's good. I mean, Oxy's good. It's not my favorite. It's come down a lot, but that's because it's an oil company. I don't like the yield. I don't like the balance sheet. I like Chevron much more. I like Diamondback much more. And, of course, I like Coterra much more. It's just a given that I think every one of those is superior to this company. At the same time, if Warren Buffett owns it, even if it's like Ulta, if he buys Ulta, the stock goes up 10%. I mean, one day this stuff is not going to be like this. But right now, you're dealing with Buffett versus Chevron. I want to take Chevron, but the world wants to take Buffett. Look, maybe these CEOs and board members don't own much of their own stock. Otherwise, I can't imagine how they can just sit there and take this kind of pain. On My Money Tonight, Take-Two shares have underperformed so far this year. Is it game on or game over when it comes to an investment in the company? I'm talking with its CEO. And a chill overtook Chili parent Brinkers International today. Yeah, Eat. Stock tumbled 10% after earnings. What's behind the drop? And is it Chili's fault? I'm going to the CEO. But first, Home Depot just offered a clear sign of what's to come with housing and the Fed. I'll reveal it and what it means for your money. So just stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.